Hello everyone, Gaurang Shah here from Geojit, here with market outlook for this week. Markets started their week and the first day on a very strong and positive note, holding about crucial moving day averages. Before I go any further, let me give you certain levels on the Sensex, Nifty Spot, Bank Nifty, Rupee Dollar, and crude oil. Sensex is trading up by about 630 points. 77,535 is the level on Sensex. Nifty is up about 190 points, 195 points. 23,545 is the level on Nifty Spot. Bank Nifty or Nifty Bank up 745 points. 51,365 is the level on Bank Nifty or Nifty Bank. On the rupee dollar equation, strength of 0.07 paise, and the level is 85.90 rupees to $1. Strength continuing in the rupee over the last week, 10 days, and strength could be further witnessed in this coming week, and the level could be 85.75, 85.80 on the strength as far as rupee is concerned versus the US dollar. On the crude oil, Brent and NYMEX, downtick continuing, 71.88 dollars to a barrel is Brent, and NYMEX is trading at about 68.03 dollars to a barrel. Expected level this week on crude oil, both Brent and NYMEX, $70 and sub $70 to possibly closer to $68 could be Brent, and $65 to $67 per barrel could be NYMEX on fallback of the news flows, and of course the uptick in terms of production from OPEC plus nation, and a little bit sluggish demand could possibly push crude oil prices to a much more lower level. Both these triggers in terms of strength in rupee and fall in crude oil prices augurs extremely well for emerging market economies like India and China. Let's see what are the levels as we go forward this week, but there could be strength in rupee against the dollar, and a further weakness is expected as far as the crude oil prices are concerned. Now coming to the markets, friends. I think last Monday when we were discussing about the market outlook, on the higher side we had mentioned two levels on the Nifty Spot, and those levels were at 22,700 and 23,000. This level on the higher side was given with a caveat that if we are able to maintain about 22,300 and 22,500, then the momentum of upside should continue, and the markets have given thumbs up to the sentiments in the market. And of course, the statements coming out from the US as far as the retaliatory tariffs is concerned on 2nd of April has added to the sentiments. Flows from FIs have been positive for the last 2 days last week. Today we'll have to wait and watch what the FIs do, and the domestic institutions have been on the sell side. What has given this flip to the market? Well, firstly, I think markets being in the oversold zone. Starting this month on 4th or 5th of March, we were at 22,000, sub 22,000 on the Nifty Spot. And from those levels, especially the last 10 days or 12 days, markets have given a phenomenal run up, pushing all the indices, whether it is sectorial indices, whether it is the frontline indices like Sensex and Nifty, or whether it is broader market indices like mid and small cap. All the indices have contributed to the market's up move, and the sentiment continues. So as we speak to all of you all this Monday morning at around about 10:15, we are seeing uptick of about 200 points on the Nifty, 22,550 plus levels, and Sensex is about 611 points, 77,500, 77,520 is the approximate level on the Sensex. Well, let me give you certain levels, what we are watching out for. If we are able to maintain and give a close above 23,550, 23,600, then the next most logical target could be somewhere close to about 23,800, which has been a crucial resistance level. So this week we'll have to watch out for these levels on the Nifty Spot. Add to it, friends, this week on 27th of March, that is Thursday, is the last and final monthly expiry for this financial year. there could be choppiness and volatility because of that. India VIX, which started sub 13 levels, is currently trading at about 13.5, 13.57, with a marginal uptick of about 4.5 to 5%. Contribution to this lower level of volatility has largely been because of the sell side numbers being subdued in some days, or there has been some side of positive buying from the FIs. This choppiness volatility could be the order of the day, especially when we come closer to the 27th of March, which is Thursday. Possibly on Wednesday, this Thursday, the choppiness and volatility will be a little bit higher. Given the kind of short-term traders trades are concerned, there could be excitement amongst them to book profits given the kind of returns that some of these short-term, medium-term trades would have made. And of course, we'll have a curtain raiser for the fourth and final quarter this financial year from 10th of April onwards. But before that, friends, we'll have to see what happens in terms of the date given by the President of United States of America, that is 2nd of April, and the expectation of the tariffs coming into force. Though the statement was made by the President Trump that there will be some sort of flexibility in terms of implementing the new tariff regime starting effective 2nd April. This primarily because of the impact of these statements and the moves that have been made by the United States has started to impact the economy in the United States of America. So there could be a softer impact, but nevertheless, I think we'll have a lot of clarity on 2nd or post 2nd of April in terms of countries, quantum, what are the goods and services on which these retaliatory tariffs are going to be implemented, and if there is going to be any flexibility, then how soft that impact is going to be. So these are the challenges that markets will have to face. But we expect the earnings season to throw in a little bit of more positivity. This we say with a lot of responsibility in terms of the changes in the earnings pattern post second quarter. Second quarter, as we all know, was a little bit of disappointment. There was a little bit better color and shade in terms of the third quarter, and the statements made by some select sectors and companies post the third quarter earnings and the expected outlook for the fourth quarter and the quarters to come by in the new financial year. So this could possibly trigger some amount of positivity in terms of higher levels that can be achieved. But this levels where we are very, very crucial. Closing, like I mentioned, 23,550 and 23,600, if we are able to maintain these levels and on closing basis primarily, then 23,800 cannot be ruled out. But then it will be an acid test because of the resistance, multiple resistance that we have witnessed in the last couple of months. Whenever we have tried to go closer to 23,800 or above that, then we have witnessed a little bit of nervousness and a top heavy feeling. There could be some amount of positivity in terms of flows also, not only from the FIs and DIs, but also from the retail investors with respect to SIPs and lump sum investments. We expect the new financial year kickoff on a positive note, and the data that will come out could be more supportive than what we've seen in the month of March. Month of March, as we already know, friends, advanced tax numbers before 15th of March, and then of course increasing cash level positions in the respective balance sheet. There was a little bit of nervousness, but our sense is that we are possibly preparing ourselves for a little bit of more elevated before we see any meaningful correction. Meaningful correction in that case, friends, on the lower level, 23,000 and 23,200. This is the broad range. You will wonder why this kind of a broad range. That is primarily because of the rally that we've seen over the last 7, 10 days or 12 days has in fact increased the consolidation range in the market. And that's the primary reason why these ranges are very wide from the current levels where we are trading. So if we do get an uptick and close about 23,550, 23,600, then 23,800, and possibility of going above that. If not, then there will be some side of selling pressure, in which case 23,000 and 23,200 cannot be ruled out. But an extreme sell-off looks a little bit distance from the way we have recovered in the markets. And more importantly, I think government's announcements, government's policy changes, and of course, sectorial movements that we've seen could excite the market a little bit on the higher side. As we interact with you every weekend, we give you two investment ideas. Today we have two different sectors. One is cement and the other one is pharmaceuticals. In the cement, we have one of the large cap names in terms of investment idea, and the name is Ambuja Cement. Uptick in cement has been quite strong. Expect the government spending at the sector, government spending at state level. Real estate revival has been very, very visible. And of course, slow and steady uptick in terms of private capex. If we have to put all this in perspective, then our assumption is that cement sector is likely to see an uptick in terms of month-on-month dispatches, consumption going up. And at the same time, if the possibility comes through, then we might see an uptick in terms of prices of cement bags. Input cost has come down. That's worked in favor of the operating margins and of course profit margins. So expect a better shade and color from cement sector, and hence Ambuja Cement as an investment idea from a long-term point of view. Approximate targets that we have set aside from a long-term point of view on the fundamental is 690 for Ambuja Cement. The next one is again a large cap name in the pharma universe, and that is Cipla. Though there has been an overhang in terms of US tariffs and pharma sector being targeted, but nevertheless, after seeing that news flow and of course possibility a softer impact on pharma sector as far as tariff is concerned, we are suggesting Cipla as an investment idea. Again, this is from a long-term point of view on the fundamental side. Approximate targets on Cipla from a fundamental point of view is about 1,700. Both these targets on Ambuja Cement and Cipla, friends, are approximate targets. Earnings will give us sense of whether to move these targets upwards or downwards. Our anticipation is most probably the targets might be moved upwards in case if the earnings are better than what the estimates we have and the street has. It will be prudent to mention over here that these are long-term investment ideas. Start at current levels, possibly on dips. Keep your investable capital handy so that you can average at lower levels and reduce your cost of investment. Thank you very much for your patience, Yarin. I'll see you again next week. Till then, please do take care of your health. Bye-bye.